We came in this morning kind of mixed. Okay. We still had bearish order flow. Okay. We have not confirmed bullish order flow. Okay. But we have a displacement down and a displacement back up. So these are conflicting type of moves. On one case, you have a massive displacement down, but down the other case, you have a massive displacement up. Okay. A lot of times when you have continuation moves, you'll get a displacement like here, and then the move up will not have any displacement, and then it'll come back down. But when the displacement is followed by follow displacement, okay, sometimes it means, and most times it means something different. Okay, but we still can't have an official bullish bias until we inverse this. Okay, and if you look at some of the higher time frames, it was very conflicting. Like the 4 hour before 10 o'clock had not inversed its fair value gaps. The 6 hour did. The 8 hour didn't. The 12 hour did. Okay, so you can imagine the not confusion, but the cautiousness. Okay, on one hand, we are taught to make sure that these gaps are filled and inversed, which is indicating change of order flow before we act. Okay, but on the other hand, this strong displacement out of this area, okay, also indicates strength in the other direction, and obviously that played out. Okay, so coming into this morning, we had a couple of areas we wanted to watch. Okay, we had London lows on both, and we had London highs and previous day's highs on both. Okay, and a little bit higher around here, I don't have it marked anymore, it was, I believe, Wednesdays or maybe Thursday, yesterday, maybe it was probably yesterday's initial balance high. Okay, so we were looking for this area to be tapped into anyway, regardless. We had a lot of areas down below, okay, that we were looking at, plus trendline liquidity. Okay, but then at 7 o'clock to 8 o'clock and 8 o'clock to 9 o'clock, we got a move lower, okay, which took out London low, but ES didn't. And ES held its 1 hour fair value gap, even though the NQ didn't. But if you look at the 4 hour chart, you have this 4 hour fair value gap here, which then overrules anything on the 1 hour. Okay, so with these holding and forming SMT, we're on the shorter term time frame charts, obviously, when these happen. Okay, so let's go to the first opportunity. Okay, so we had a move, we created the SMT, okay, and we're right around 8 o'clock or so. All right, and we get this inverse fair value gap right here. Okay, which let's see, this was at 8:40. Okay, which was a valid trade, and that was one entry. Okay, that could have been taken. Okay, we had SMT with London. We had SMT with London low, but that's it. We didn't have SMT bar to bar, so it's kind of a weird SMT. See here we have here. We don't have SMT, but the lows of London we do have SMT. It was very weird. So that kept me personally hesitant about this trade. And also, we're kind of at a weird time. We're manipulating down at 8 o'clock. It's kind of early without news. Usually it's 8:30, 9:30. So I'm looking more towards the 8:30 time. And this is why time is important. Okay. So at that time, we're on the 1 minute chart. Okay. And we're still moving around. And we really didn't, look for anything here because there was no inverse. This was kind of a V formation. I wouldn't have done anything with this. We are long biased because we're delivering from a 4 hour. Okay. And we have SMT at London lows. So, we're kind of leaning bullish first, not bearish. And as soon as we get this manipulation at 9 o'clock, which is nice, around 9:15 entry, or 9:10, this is a nice area because it's just right before the market and we can start to see price expand. And this was the first trade that I liked and did. And the target was London highs, previous day's highs, which we hit nicely. Okay. I usually like to go for a base hit because, especially when price is moving before New York opens, sometimes you get that turtle soup before higher. So, there was no need to stay in it because even a move to there, that was actually it was this one right here. I'm sorry. It was this one right there. This is a over 2 to 1 risk to reward trade, between about 2.38 risk to reward trade. Okay. And, I knew I'd get an opportunity now. I thought I'd get an opportunity here, but this closed a little too aggressively and hit London. I know it went higher after, a lot higher, but, rules are rules. All right. And then by this time, we have inversed this 4-hour fair value gap. So we're bullish everywhere now after this close. And we've taken at this high. We've taken at this high. The target now is here, clear target. So on this 4-hour candle, we're going to want to buy a dip. Okay. But we need something to deliver from. Obviously, there's no 4-hour fair value gap. We have to wait another 4 hours. So we're going to go down a time frame. Okay. If you look on the hourly, okay, we get a fair value gap here. Okay, and you can also see it just as clearly on the 15. There's a bigger fair value gap, but what we're looking for is an SMT inside that fair value gap. And that's exactly what we got, because now this is our indication where we can trade internal to external. Remember, if internal holds and defends, then price will seek external. And it's funny how look how we thought this data high would be taken. Look how close. I mean, just ridiculous. The ES took it. So when price came down there with that SMT at that level was right here. Okay, and this was taken off the 30-second chart. We had SMT with ES right there. See, SMT inside the 15-minute fair value gap. We had a clean 30-second inverse fair value gap right there. And this trade was taken to that high right there. Remember, we're just looking for base hits. And this is a 3 to 1 risk to reward trade. That's hardly a base hit. Base hit's like a 1.5 to 1. A 1 to 1's like a bunt. For those of you overseas in London, I'll explain that terminology at our next Q&A. Elizabeth, if you're watching, I apologize. Okay, so that was the second good trade of the day. I expected this to go to data high. That was the target, to keep moving higher. If you look, the ES out of this level did hit external right there. But the problem is that when that hit external, the NASDAQ didn't, and gave it a couple of minutes. And once it did this and ES started to pull back from that key level, you got to get out. You can't wait for that level, because the ES has already hit its target. Now you could be looking at an SMT, and as you can see, we had a 65 point drop. Okay, and yeah, it did go higher, but no one wants to sit through that, and it's going to take you out probably break even or trailing somewhere anyway. Okay, so when the ES does hit, or either one hits, the first one and you're the trailing one, give it a minute or two, and if the other one starts to pull back and you see some type of move like this, or an inverses a 30-second, just get out.
Hey everyone, it's Dale here. I hope you enjoyed the video. If you like to trade alongside me and our team of prop firm funded traders every day, then click the link below the video and hop aboard. We are looking forward to trading with you.